Here is an example of the money management algorithms and how you can go from a strategy that has a equity curve like this, which is decent for a real trading system. This is Tick Pulse V7, an old strategy, and we put it over here on this chart. And I pulled this workspace up. It had some extra strategies on it, and I removed those and saved it for today in 2023. This is a Windows 7 computer. But if you take a look at how this strategy works, basically we're looking at the NYSE tick to make trading decisions using that indicator tick pulse, and the blues are bullish, the reds are bearish, and you can see $55 average trade profit. Here is the equity curve. But then when you apply a money management algorithm, you get this equity curve. Much better equity curve. $174 average trade profit, 91.30 drawdown, 67, 495 going back 7 years in the E-mini NASDAQ, very consistent over that time period. And the rules that we use are basically a degradation or a pinpoint algorithm, format, strategy, and we're going to take a look at this. We're looking at the NASDAQ 1 minute chart. So this strategy over here, this chart over here has this strategy in it, while this chart over here has the tick pulse strategy in it. So this chart is looking at this chart, and it has a look at the add-in Q.D 1 minute and limit entry. And if we scroll down, you can see we're using rules 8 and 9, which measure the average drawdown, a moving average crossover of the average drawdowns. And then we look at buying the drawdown on a $3,000 move down. 2,000, if it's down 2,000, we start trading it. If it runs up from that point by 2,000, we stop and then wait for another $2,000 drawdown. And so you can find this to be a useful method in a strategy that has kind of a degradation in its equity curve, or a choppier equity curve. So choppy equity curves or degradation in your equity curve. It won't help if you already have a strategy that looks like this. Chances are the equity curve looks like this. Chances are it's optimized, and so real trading systems tend to have more chop in them, and then sometimes they degrade over time. And so what you can do is you want to start when it's down and exit when it's up, start when it's down, exit when it's up. So even if this degrades like this, you're starting when it's down and exiting when it's up, starting when it's down, exiting when it's up, starting when it's down. So even if it's in a downtrend, now if it goes straight down, you have to have a money management dollar risk stop. So it's more likely that a strategy in the future could go straight down than would ever go straight up. So, but we do see both. So you can have this degradation algorithm, and it works on a lot more evidence that applies to a lot of strategies as you move forward in time. So if you initially develop a strategy and the equity curve looks really straight, or even just barely, the degradation backtest on that is not going to look so good. But going forward, you'll probably find that your equity curve is a little more choppy than in the future than it was in the past. And so a degradation algorithm could be applied even if it doesn't perform as well going forward than it has in the past. So if you take a look at this, that's just basically what we're doing. We're starting when it's down and exiting when it's up. It uses some of the original system rules. It trades between 9:30 and 15:30 Eastern Standard Time, and it exits at 15:55, uses a $1,200 stop loss, and then it does not sync the exit with the master. So this is the basic setup that I wanted to share to explain how the money management algorithms work, and how this principle that we see, where you take a strategy with a normal and real equity curve that's choppy like this, and apply a degradation algorithm, allows you to maybe straighten out that equity curve and improve your risk to reward with no strategy ever being perfect. This is a nice improvement using a basic methodology. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.